Newsflash. We just got a lot of information today at 11 o'clock Pacific Daylight Time. We're recording this on the 18th of September, 2024. So I have a, really important message to convey to you because I want to make sure that we get you right information. So what did I do? On this blog, I got the expert, the knowledge broker about lending, Chad Hawker from Signature One Lending, #1 in the country for his company. Chad, thank you very much for being on here. And we've got to figure out what is all this talk about the Federal Reserve lowering 0.5%. I want to make sure that we are understanding this right. Is this going to make it so that mortgages are cheaper, or does it mean something else?
Great question, William. And I'm so glad that you are getting this out right away so people have accurate information. We all know, no knock on the media, but they oftentimes don't do a great job clarifying what this means. So what does it mean? What doesn't it mean? Right?
That's the question.
That is, and this is really good news. I don't want to make this sound or dwarf the fact that this is really good news, because we have been waiting for 3 years for the tide to turn. For 3 years, the Fed has been tightening. They have been raising their Fed funds rate, which indirectly affects all of us. It makes things more expensive. And what is the Fed funds rate? The Fed funds rate is the short-term borrowing rate between banks, and that ends up passing on to all of us. This affects things like credit cards, affects things like home equity lines of credit. So all of those today have gone down 50 basis points, 0.5%. So if you had a rate of 9.5, it is now 9, right? So that is great news. But what does this mean for mortgage rates?
That's what we're interested in here, that's for sure.
Exactly. Mortgage rates are a different animal. Now, the good news is mortgage rates, the market, the stock market, the bond market, we move in anticipation of what the Fed is going to do, of what we think the Fed is going to do based on the data of analyzing inflation, analyzing the job market, the overall economy. And so over the last 4 weeks, we have seen a dramatic drop in mortgage rates in expectation of what the Fed was going to do, hoping that the Fed would, in fact, drop it by 0.5%. So we have already seen in mortgages that, a month ago, we saw rates around 7. Now we are seeing them close to 6. Some 15-year fixed are in the 5s. This is So we've already seen the improvement in mortgage rates, but what does this mean for the future? The Fed has also said they intend to potentially cut another 50 basis points by the end of the year, and that they may cut another 100 basis points through next year. This is going to create a gradual trend in mortgage rates, the Fed funds rate, over the course of the next 1.5 years. So we have been waiting for this for a very long time, for the Fed to turn the tide, start loosening, and that is going to create a chain effect of lower interest rates, more affordability, and frankly, more demand. And this is the caution that you can share with your buyers is for every 1% drop in rate, 5 million more buyers re-enter the market. Think about that.
Oh boy.
5 more buyers. So we already have a pretty tight inventory. So as these rates get lower and lower, more demand, more affordability. That's great for buyers, but it is going to make it a little more challenging. So we got to encourage these buyers to get back into the market, get pre-approved, get ready to go, and be proactive to get out there, because it is going to get harder as these rates start to move back down. But let's just focus on today. It is exciting news. It's starting to happen. It wasn't but 6 months ago we saw rates at 8%. Now we see rates in the 6s. But probably 6 months to a year, we're going to see them maybe around 5, maybe high 4s. So it's a trend that's going to continue, and we all need to be ready for it. And it is very encouraging, very exciting.
All right. So if I see something I like right now that's on the market, it's been on the market for a little bit, I can go ahead and make an offer. I can get a loan in the low 6s with some of your 30-year products, maybe some of the things that allow me to have what do you call it, a 2-1 buy down. So
Yeah,
So that way I can start out in the 4s and go in the 5s and the 6s in 2 years. But if, like you said, in the next 6 months, it turns out that we have something in the high 4s, low 5s, I can refinance that, can I?
absolutely. Yeah, you're just going to improve upon it. So the more you wait, the harder it's going to be. Whereas if you just get in the market now, yeah, rates are in the 6s, but you'll eventually be able to reify that in the 5s, maybe low high 4s, right? So there's no reason to wait. We can always improve upon what you get. Don't make it harder on yourself to wait until they drop, because when they drop, as they drop, demand will continue to rise. That will make it harder for buyers to win. So this is very exciting news, but be smarter than a fifth grader, smarter that you know that when the Fed cuts doesn't mean mortgage rates cut. They've already moved. The mortgage rates have already moved. Yes.
Well, thank you for putting that into perspective. I'm William Smith with the Carmel Luxury Group. We've had the pleasure of having Chad Hawker from Signature One Lending in Carmel give us the lowdown on the news today. You're going to hear a lot of news about this Federal Reserve reduction. I want to make sure that you get the best information here on our vlog at the Carmel Luxury Group. And make sure that you contact Chad Hawker at Synergy One Lending to make sure you get the rest of the story. Chad, thank you very much. We'll talk soon.
Thanks, William.